John Lovallo. John, good to speak with you and catch up with you on this. Clearly, everyone wants to be a bit, of a counterpuncher and say that, some of the bad news is already priced in. What makes you think that might be the case for the home builders here?
Well, thanks for having me, Mike. And let me frame the way we're thinking about it, at least. So the National Association of Home Builders Sentiment Index hit a contractionary level yesterday. And it was down for the 8th consecutive month. That's the worst stretch since 2007 during the global financial crisis. Google new home searches were down 10% in July versus the prior 8 Julys. Single-family housing starts for July fell below 1 million for the first time since June 2020. And new home sales in July are likely to be worse than the 590 that we saw in June. So you take all this and you couple it with builders citing green shoots of demand stabilization, the National Association of Home Builders saying that settling rates will support demand in the coming months, and the stocks are going up on bad news. Couple that all together, and it feels like we're approaching a bottom here.
It's interesting because, over the course of the downturn that we've seen here, there was a little bit of a revisionist idea that took hold that said, actually, there is no broad scale housing shortage in this country. And actually, if the homes that are under construction get completed and we have mortgage rates at this level, this is not necessarily a situation where we have years of future pent up demand. Is that part of the premise of your call, either, pro or con?
Yeah, I mean, look, I think we've done our own analysis and it would suggest that there's 3 to 4 million units of pent-up demand, and we've looked at this from several different ways. I think that, look, if you look back to when the financial crisis happened to today, there was just not enough homes built. And demand now, because of the millennials coming through the pike and just this generational trend that's occurring, we're just in a tight spot where there's just not enough homes out there for the need.
Is there any magic level where the sensitivity of demand kind of gets a little bit tougher when it comes to mortgage rates at this point? We already, we tested some of the highs, multi-year highs in mortgage rates. It certainly brought things to a bit of a halt, but it's moderated since.
Yeah, so it's a really good question. I think that we have to consider the buyer that's in the market today. It's really the first-time entry-level buyer. That's a very need-based buyer that, look, if things get tight and they can't afford it, they're likely to move a little further away from city centers. They're likely to buy a smaller footprint. And, oh, by the way, there's this huge immigration trend that's happening in the U.S., and we're in the midst of the largest generational wealth transfer in the history of the U.S. So you put all those factors together, and there's so many levers that can be pulled by the first-time buyer that I'm not sure that there's a magic rate that kind of cuts off demand.
Which builders are your favorites at this point in terms of being able to capitalize on the trends?
So I think that the builders, to your earlier point, have been hit pretty hard, right? So I think you can go with the biggest and the best. That's D.R. Horton, ticker DHI, biggest builder by volume, very consistent executor, and really consistent, focused on the right part of the market, which is that first-time entry level. Lennar is our second favorite, second biggest builder by volume. You also have the optionality from the spin that they're conducting some non-core assets. So I think that that's pretty attractive as well.
Yeah, we're talking about a couple of stocks that are trading, 5 times forecast earnings or something like that. What gets you past that maxim that says, look, don't buy cyclical stocks at depressed PEs because it means the earnings are probably in question looking ahead?
Well, that's one way to think about it. The other way to think about it is, hey, you know what? These stocks are pricing in such a draconian scenario that what is likely to happen is far less bad, right? And so I think that all the bad news is sort of in the stocks, and I think that we're in a position now that even a little bit of good news is going to translate into big moves in the stocks potentially. Estimates have come down quite a bit. I think that they're probably reasonably set for 2023. I mean, we have earnings down about 10%. Net income, I should say. We have earnings relatively flat, just given share buybacks, because these builders are going to generate a tremendous amount of cash. But it feels to us like there's been a reset in expectations, and probably too far of a reset in expectations, where some good news here could go a long way.
All right. Yeah, definitely some appetite for some of the more cyclical names. Home Depot's CFO, I think today, said they didn't really see a lot of an impact from weakness in the housing market just yet. So maybe some glimmers there. John, appreciate the time today. Thank you.
Thanks for having me.